Welcome back to our accounting learning journey series. If you are new here, my name is CA Neeraj B and my channel at the rate Accounting Buddy NB is all about making accounting simple and easy to understand. In today's lesson, we are diving into the word of journal, the first and the most crucial step in recording financial transactions. Whether you are a student, professional, or a business owner, mastering the journal is key to building a strong foundation in accounting. We will explore everything from understanding what a journal is, its types, key terms, and functions to the actual process of journalizing transaction with real life examples. But here's the deal. Watching this video till the end will give you the confidence to handle journal entries like a professional. By the time we are done, you will be well on your way to mastering accounting step by step. So relax, grab a seat, and stay with me till the end. Let's get started. Business transactions that can be measured in terms of money are recorded in the books of accounts basis source document such as purchase invoice, sales invoice, debit notes, and credit notes. These documents are evidences of the business transactions. The books of accounts are broadly divided into two, journal and ledger. Journal is a book in which all the transactions are initially recorded by applying the rules of debit and credit. The transactions recorded in journal are posted in respective accounts in a ledger, and any accounting information can be extracted from the ledger. Both journal and ledger are essentials to complete a system of accounting. Let us now understand the meaning of the term journal. An accounting journal is a formal record where business transactions are initially documented before being posted to the journal ledger. It is often referred to as the book of original entry in accounting. An accounting journal is a book of primary entry in which the transactions are first recorded in a chronological order from the accounting vouchers that are prepared basis source documents such as cash memo, sales invoice, purchase bills, etc. According to MJ Killer, a journal is a chronological record of financial transactions of a business. And according to Rowland, the basic book of accounting is called journal. Precisely, it is the book of prime entry, which means day book. Traders record his total daily transactions in it. The process of recording the transactions into a journal is called journalizing. In this slide, we will learn about the type of accounting journals. Transactions can be recorded in one journal or separate journals may be maintained to record the particular type of transactions. Journal type of journal is used to record non-repetitive transactions such as depreciation, accruals, and adjustments. Then we have specialized journals such as sales journal for recording credit sales, purchase journal for recording credit purchase, cash receipt journal for cash inflow transactions, cash payment journal for recording cash outflow transactions, and purchase return journal for purchase returns. These separate journals are called special journals or special purpose books. These separate journals are often called subsidiary books. Let us now learn about the characteristics of a journal. It is a chronological record of financial transactions of a business. It is a book of original entry which records all the details of transactions from various source documents. It records both the aspects of the transaction, that is the debit and the credit, using double entry system of bookkeeping. It gives complete details of a transaction in one entry. It forms the base for recording or transferring the journalized transactions to the individual accounts known as the ledger accounts. Since all the transactions are recorded for the first time in a journal, it is correctly known as a book of original entry. Let us now learn few key terms related to journal which are frequently used. First one is book of original entry. Journal is called the book of original entry because a transaction is first recorded in this book, thereafter it is posted to the ledger accounts. Second term is journal entry. An entry recorded in the journal is called journal entry. Next term is journalizing. The process of recording a transaction in a journal is called journalizing. And another term is posting. The process of transfer of journal entry to ledger is called posting. Let us now learn the functions of journal. First is accuracy. Recording of business transactions in journal in chronological order minimizes errors and ensures the compliance of financial records. Second function of journal is analysis of transactions. Journal ensures that each transaction is analyzed and it is determined which account or accounts are to be debited and credited. Journal provides a clear, traceable path for auditors to verify the authenticity of the financial statements. Journal entry recorded in the journal book is posted in the relevant ledger account. Journal also helps to ensure adherence to the compliance of the accounting standards and the legal requirements for record keeping. Let us discuss advantages of journal. Advantage number one, it provides accounting data in chronological order. Transactions in journal are recorded in the sequence they have actually entered into. Therefore, the transactions are recorded date-wise. Advantage number two is accuracy. It reduces the chances of errors in the accounting records since the amount debited can be verified with the amount of corresponding credits at the same time. Advantage number three is related to the transaction details. While recording the transaction in the journal, complete details and reasons in terms of narration is written to understand the entry in future. Advantage number four is it provides the basis of ledger posting or transferring the entries to the individual ledger accounts. Advantage number five is that it helps locating the errors in case trial balance does not match. Let us now know the limitations of journal. It is not suitable for large volume of transactions. Recording all transactions in a journal is feasible if the number of transactions is less. In case the number of transactions is large, it becomes inconvenient to maintain one journal to record all the transactions because in that case the journal book will become voluminous. This limitation can be overcome by maintaining subsidiary books such as purchase journal, sales journal, etc. Another limitation of journal is that it does not reveal the cash balance of the business. After recording all the transactions in journal, cash balance can be known only after posting all the cash transactions in the cash account, which is a lengthy process. This limitation can be overcome by maintaining a special journal for cash transactions, that is the cash book. Journal is not a substitute of ledger. Information related to a particular account head is known after posting the transaction in the ledger accounts. Journal thus is not a substitute of ledger. Let us understand the type of journal entries. First is simple journal entry. It is the type of entry in which only two accounts are affected. One account is debited and another account is credited with an equal amount. Second type of journal entry is compound journal entry. It is the type of entry in which more than two accounts are affected, one or more accounts are debited, and one or more accounts are credited. We will discuss both type of journal entries with examples in our subsequent slides. Let us discuss the format of a journal entry. The specimen is displayed on your screens. There are 6 informations which are filled to record a journal entry. Let us discuss them one by one. Information number 1 is date. In date column, the date on which the transaction has happened is written. Information number 2 is particulars. Each business transaction has two accounts, debit and credit. In the first line of the particular column, name of the debit account is written along with the word DR at the end. Second line starts with the word to and is followed by the name of the credit account. Information number 3 is the narration of the transaction. Under this, a brief description of the transaction is written below the entry. Information number 4 is the ledger folio. In this column, the number of the ledger page is written to which the debit and credit aspects of the transaction is posted. Information number 5 is debit column in which the amount debited is written, and the information number 6 is the credit column in which the amount credited is written. Let us now learn steps in journalizing. The process of analyzing all the business transactions of debit and credit and recording them in journal is called journalizing. Following steps are followed in journalizing. Step 1. Determine the debit and the credit account or accounts involved in the transaction. Step 2. Classify these accounts into assets, liabilities, capital, expenses, or income. Step number 3. Apply the rules of debit and credit for above accounts and identify which account is to be debited and which account is to be credited. Step 4 is record the date of transaction, particulars, and mention the respective debit and credit amounts against each line. Step 5 is to write a brief description of the transaction recorded within the brackets in the next line in the particulars column. Such description is termed as narration. Step 6 is draw a line across the particulars column to divide one journal entry from the other. Let's understand the important consideration for determining whether a transaction is a cash transaction or a credit transaction. Situation number 1 is if transaction is of sales or purchase of goods and the name of the seller or the purchaser is given and it is not stated that the cash is transacted, it is accounted as a credit transaction. For example, if question says goods are sold to Tolly, that means goods are sold to Tolly on credit. Therefore, in such a transaction, Tolly's account being a debtor account is debited and the sales account is credited. Similarly, goods purchased from Polly means that the goods are purchased from Polly on credit. Therefore, in such a case, purchase will be debited while Polly's account being a creditor will be credited. Situation number 2 is if a transaction is of sales or purchase of goods and the name of the seller or the purchaser is not given, it is accounted as a cash transaction. For example, if the transaction is that the goods are sold for $1,000, in this case, cash account will be debited and the sales account will be credited. Situation number 3 is if a transaction is of sales or purchase of goods and the name of the seller or the purchaser is given and it is stated that the cash is transacted, it is accounted as a cash transaction. For example, if question says goods sold to Tolly for cash, that means the transaction is settled in cash. Situation number 4 is if in an expense transaction Even if the name of the party receiving or making the payment is given, it is accounted as expense incurred in cash. For example, if salary of $1,000 is paid to Rolly, the transaction will not be recorded in the account of Rolly. Instead, salary account is debited and the cash account is credited. Another important business transaction we should always make note of it is when the capital is introduced in the business by the proprietor, it is credited to the capital account, whereas withdrawal of cash or goods for personal use is debited to drawings account. Let us learn few important facts regarding recording of transactions in journal. Transactions are recorded in journal from the viewpoint of the business because of the business entity concept. Transactions are recorded on the basis of accounting vouchers prepared from the source documents. On every transaction, rules of debit and credit are applied and accounting concepts, conventions, and principles are followed. Let us understand a business transaction journal entry displayed on your screens. Mr. Tolley started business and introduced $20,000 in cash and $50,000 by check. Now, if we pass the journal entry of this transaction, it will be recorded as displayed on your screens. The accounts affected by this transaction are bank account, cash account, and capital account. Let us now understand the reasons of debit and credit under both traditional classification of account and modern classification of account. Let us first understand why bank account is debited with $50,000. Under traditional classification of account, bank is a personal account. Rule of debit and credit for personal account is debit the receiver. Now let us apply modern classification of account rule of debit and credit. Under modern classification of account, bank is an asset. And the rule of debit and credit for asset account is debit assets when they increase. Now let us talk about cash account. Cash account is again debited in this transaction. Under traditional classification of account, cash is a real account and the rule of debit and credit for real account is debit what comes in. Therefore, cash account is debited as the business is receiving cash. On the other hand, under modern classification of account, cash is an asset and the rule of debit and credit for asset account is debit assets when they increase. Now let us talk about capital account. Capital account is credited in this transaction. Under traditional classification of accounts, capital is a personal account. And as per the rules of debit and credit for personal accounts, credit the giver. Therefore, the capital account is credited. Under modern classification of accounts, capital introduced by the proprietor is parked in a capital account of the business. And as per the rules of debit and credit for capital account, credit capital account when it increases. Remember both traditional as well as modern classification of accounts and their respective debit and credit rules. Also remember whether you apply the traditional classification of account or modern classification of accounts, the result of account to be debited and credited will remain the same. Let us take another illustration displayed on your screens to further strengthen our understanding of a journal entry. The transaction is office furniture worth 1500 is purchased from Homebox LLC and the transaction is settled by cash on 7th of July 2024. Now, if we analyze this transaction, the two accounts which are getting affected are furniture account and cash account. Let us now understand the reason of debit and credit under traditional classification of accounts and under modern classification of accounts. Let us first understand why furniture account is debited. Under traditional classification of accounts, furniture is a real account. As per rules of debit and credit for real account, debit what comes in. Therefore, furniture account is debited. While under modern classification of accounts, furniture is an asset. As per rules of debit and credit for asset accounts, assets when increase are debited. Therefore, furniture account is debited in this transaction. Now let us talk about cash account. Cash account is credited. While under traditional classification of accounts, cash is a real account. As per rules of debit and credit for real account, credit what goes out. Under modern classification of accounts, cash is an asset. As per rules of debit and credit for assets, credit assets when they decrease. In this section, we will answer few questions related to the topic basic journal entries. Question number 1 is, what is a journal entry in accounting? The answer is, a journal entry is a record of a financial transaction in the accounting system showing debits and credits. Question number 2, why are journal entries important? Answer is, journal entries help record transactions accurately and provide a chronological record of financial activities. Question number 3, what are the two sides of a journal entry? The answer is, the two sides are the debit side and credit side. Question number 4, state any one golden rule of accounting. The answer is, debit what comes in, credit what goes out. Question number 5, what is the purpose of a journal in accounting? The answer is to record financial transactions in a chronological order before posting them to the ledger. Question number 6 on your screens is, what is the difference between a journal and a ledger? The answer is, a journal records transactions in chronological order while a ledger organizes accounts by type. Question number 7, what is the double entry system? The answer is, a system where every transaction affects at least two accounts with equal debits and credits. Question number 8, what happens if debits do not equal credits in a journal entry? The answer is, it indicates an error in recording the transaction. Question number 9, what is the first step in recording a transaction? The answer is, identify the accounts affected by the transaction. Question number 10, what is the format of a journal entry? The answer is, a journal entry contains the information like date, account names, debit amounts, credit amounts, and a brief description. Question number 11 is, journal is known as, and the options available are option A, a book of primary entry, option B, a book of secondary entry, option C, a book of final entry, and option D, both secondary and final entry. And the correct answer is option A, a book of primary entry. Journal is known as a book of primary entry. Question number 12, ledger folio column in the journal is filled at the time of, and the options available are option A, journalizing, option B, balancing, option C, posting, and option D, costing. And the correct answer is option C, Posting. Ledger folio column in the journal is filled at the time of posting. Question number 13 is recording of transaction in journal is called, and the options available are option A posting, option B journalizing, option C ruling, and option D posting, and the correct answer is option B journalizing. Recording of transactions in journal is called journalizing. In my upcoming video of part 2 in the series of journal entries on 1st of March 2025, we will master the technique of journal entries with the help of 13 illustrations covering over 25 different kind of business transactions. We will also learn various accounts associated with the purchase and sale of goods and their respective journal entry rules with real life illustrations. If you enjoy the content of my channel and appreciate my learning style, please subscribe, share and like my YouTube channel @accountingbuddy NB. Thank you and goodbye for now.